Good morning and welcome to the GRC International Group PLC Interim Results Investor Presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated in the right-hand corner of your screen. Just click Q&A, scroll to the bottom, type your question and press send. The company may not be in a position to answer every question received during the meeting itself. However, the company review all questions submitted today. We publish responses where appropriate to do so. Before we begin, we'd like to submit the following poll. I'd now like to hand you over to Alan Corder, CEO, and Chris Hartshorn, CFO. Good morning.
Good morning, and good morning, everybody. Welcome to this presentation of our FY23 first half results. For those of you who don't know us, GRC International Group is a governance, risk management and compliance business. Our biggest brand, IT Governance, is a market leader in cyber defense in depth. We work with clients around the world to help them build cyber resilience, privacy, GDPR compliance and data protection regimes, and the broadening range of cyber regulation and cyber risk are the key drivers for the growth in our business. In the first half of this year, headline results we'll talk about first. I'll then hand you over to Chris, who will walk you through the financial results. Come back to me, I'll give you a trading update and a forward look at the way we see the next couple of years. And then there's a whole lot of information which will be available in the slides for you when we distribute them afterwards. So, for the first half of this financial year, our revenue is up 11% in our software as a service division. In particular, revenue is up 31% over the same period last year. Our recurring and contracted revenue across the group as a whole is up 33%. And our gross margin is now up to 60% from 58% in the same period last year. And that really reflects the operational gearing, the internal efficiencies which we've been working on over the course of the period, and the shift inside the group to more and more software as a service type business, of course, helps that shift in gross margin. We launched payment card industry QSA services in the US during the period. We've signed our first contracts to provide consultancy services around SWIFT compliance. SWIFT is the international method for transferring money between some 11,000 financial institutions, and they now have to meet some fairly tight compliance requirements in order to avoid rogue nations intercepting financial transactions. Our web transactions, web and e-commerce is a key part of the group. One of the ways in which we're unique are up 22%, and that's in spite of the fact that our web traffic itself is not up very dramatically, but our web transactions, in other words, our ability to convert clients on the website, has improved significantly. Ongoing investment in infrastructure supports our growth in the business and supports our growth into the years that come. The group really is divided into three divisions. The professional services division is still the biggest division. So in the half year, it did £3.6 million worth of revenue. That's, as you look at the screen, the box on the right-hand side, it's an 11% year-on-year increase. And in that revenue, our primary focus is around governance and risk management compliance services, ISO 27001, which is the international cybersecurity standard, and which has just been updated in the course of the end of October. So we're expecting to see quite a big piece of growth coming as a result of that change in the standard. We do penetration testing, PCI, and a whole range of legal, GDPR and data protection officer services in our professional services division, all of it supported by technology. The e-commerce division, which is primarily the division through which we sell professional training, but also a range of other books, tools and so on from our publishing business. Revenue down 11% year on year, and that kind of reflects the uncertainties that a number of organizations felt was in the market during the period, particularly with the onset of recession and the additional public holidays and all of those kind of have a very immediate impact on revenue. But the conversions and the value of business through the website continues to go up. So revenue itself down, but value continues to go in the right direction. And of course, software as a service, £2.1 million is our revenue in that division. It's the fastest growing and most highest margin inside the group. At the heart of it is our cyber comply platform, which enables organizations, usually small to large, rather than enterprise level organizations, to manage cybersecurity compliance, privacy compliance, PCI compliance, all on a single integrated platform that is in the cloud and is a subscription-based product with very high levels of stickiness from the point of view of client retention. We also have a portal that supports clients doing Cyber Essentials. So Cyber Essentials certification, we're a Cyber Essentials certification body. We do vulnerability scanning. We have a fast-growing staff awareness business in GRC learning that covers the whole gamut, not just privacy and cybersecurity, but also anti-money laundering and the whole range of compliance staff awareness training that clients tend to want to get on a single platform. And of course, documentation. The whole governance, risk management and compliance world is very much about policies and procedures. And through our document kits platform, you can access documents which we keep up to date for you, but which you can tailor and customize for your own specific environment, but which enable you to demonstrate compliance with whichever specific sets of requirements you want to be complying with. Those three divisions operate internationally, but if you were to break out our international revenue, we've got businesses now in the EU and in the USA where we're beginning to get some significant growth. We're up 14% in the first half, with our fastest growth being in the US. The US opened more recently than did the EU, and so we have 40% growth in the US, and the long-term potential for us, as we see it in the US, is very significant. So that's the kind of overall picture of how business has been in this half year across those three divisions. I'm going to hand you over to Chris, who'll give you those financial details in rather more depth. Chris.
Thank you very much, Alan. So the slide up on the screen at the moment just sets out our H1 FY23 financial highlights as per the RNS that we released yesterday. So revenue up 11% to 7.3 million compared to 6.6 million in the comparative period. As Alan's just touched on, our international revenue within that was up 14% to 1.6 million compared to 1.4 million in the comparative period. Our SaaS division revenue up 31%. We're starting to really see the investment in high margin, scalable, revenue recurring products really start to pay off and come through in the numbers. Our overall recurring and contracted revenue was up 33% to 5.3 million compared to 4 million in H1 of FY22. Recurring and contracted revenue now makes up 73% of our overall revenue. That's up from 61% in the comparative period. Gross margin improvement to 60% compared to 58% in H1 22. The continued improvement reflects both the operational gearing from subscription services and that growth in the SaaS division, and also reflects some internal efficiencies. We've invested into internal automation projects, which have driven consultancy utilization rates higher. Our EBITDA and loss for the financial period are both in line with H1 of last year. EBITDA of 0.4 million and loss before tax of 0.5 million. Our net cash at the period end of 0.2 million and borrowings of 0.8 million are an improvement from the position at the close of last year's H1. This slide here just sets out some of the more detailed elements of the income statement. So revenue, as we said, 7.3 million, up 0.7%, up 0.7 million year on year. We've seen 11% growth in the period, despite the macroeconomic factors that seem to be playing out in the market. And as Alan said earlier, the the slight lengthening of our sales cycles as people start to get a little bit more nervous about recession and all of those sorts of factors that are going on currently. Revenue was flat against H2 of FY22, with H2 traditionally being the group's stronger trading period, so that sets us in good stead for H2 of this year. Gross profit at 3.8 million, up 0.6 million year on year. That's up 16%. As we've said, operational efficiencies start to come through from the consultants and improving utilization rates all the time. And also, as we say, that growth in the SaaS division pulling up the gross margin of the group overall. Our admin expenses, as expected, were up 0.4 million year on year. In H1 of this year, there's been an investment in our workforce, in marketing, in various other projects which we expect to deliver further growth into H2 and beyond. We raised money at the end of our last financial year in order to invest in those projects. So that was all part of our current year plan. We have seen some inflationary pressure on prices, but management is very much focused on tackling that. All of that results in a £0.4 million EBITDA in line with H1 of last year. The revenue growth, as we've said, from H1 being invested back into the business to fund and to support further growth for the future. H2 is traditionally the group's stronger period, so our H1 results leave us well positioned to achieve our full year objectives this year. This slide here just sets out some of the more detailed elements of our revenue and gross margins, some of the segmental reporting around the three divisions. There's a lot of detail on the screen, which of course you'll have access to via the slide pack, both on this platform and through our website. But the three key points are set out on the left-hand side. Significant growth in the SaaS division, our high margin, highly scalable revenue division. E-commerce down 11% in the e-commerce revenue down 11% year on year. That is, as Alan said, the division that is most sensitive to macroeconomic circumstances. The comparative period, of course, included a certain element of COVID bounce back as people got very excited about the fact that the world was returning back to normality. Whereas this year we saw a much more traditional summer holiday season with people going away, and we started to see concerns around inflation and recession creep in. And the e-commerce division is, of course, the quickest division for people to, and the easiest division for finance teams to make very snap decisions and just hold back temporarily on spending. International revenue up 14%, as we've also touched on. The majority of our US clients are served through our IT Governance USA company, and the majority of our European customers are serviced through our IT Governance Europe Limited company. The use of local entities provides a natural partial hedge against foreign currency risk. Cash flow highlights for the period. Really, this period's cash flow is explained by the fact that we raised funds back in January 22. We raised those with a very specific purpose, both to clear down our HMRC liabilities that we'd built up through the COVID period, and also to invest in some investment projects to fuel and fast track growth through H2, the latter end of H2 and into the next financial year. Those projects and that spend has taken place as planned, and we're excited to see what the results that those things will deliver going forward. Borrowings were reduced in line with all of the planned repayment profiles, and we closed the period with £0.2 million of cash on the balance sheet. There is a full, more detailed slide on setting out more of the detail in the balance sheet in the appendices to the pack. I won't go through it at this point. The key point in the balance sheet really is the cash flow movement and what that cash has been utilised for. So I'll hand you back now to Alan for a little bit more colour and a little bit more detail on a trading update.
Thank you, Chris. So, ladies and gentlemen, the kind of data which drives our business, I've put a sample on this next slide. So, recent cyber breaches which have made the news include major organizations like Microsoft. You would have thought that Microsoft would understand how to do cybersecurity. The Royal Mail, they have an awful lot of valuable data. Their cybersecurity is not as good as others, but being able to steal their data was a good opportunity for an attacker. As a protective measure, said Royal Mail, we stopped access to click and drop temporarily. That's the kind of impact that a breach has, not simply that data is stolen, but also that organizations are forced to suspend services. You also end up getting a fine. So Interserve ended up with a £4.4 million fine because their cyber attack, once investigated by the ICO, was traced back to a failure to have put in place the technical and organizational measures that are required by law for organizations to protect personal data. And the fact that they put them in after the event was not enough to satisfy the ICO, who made the point that GDPR has been in force since 2018, and really the Interserve should have been in compliance since 2018. Medibank, an example of the attacks on the health sector. There's lots of valuable special categories of data available in the health sector. Cybersecurity is not very good, and the opportunities are very strong for organizations in the criminal world. So there's just four of the headlines of the last few months. There are ongoing, every single day, headlines around organizations who've made the decision to defer investing in cybersecurity because of something else that comes along, and then find that they not only have a breach, and the breach typically takes place somewhere between 10 days and a couple of months prior to the point at which they discover it. And so they have to spend a lot of money on trying to get their systems to work again, deal with the typically ransomware attack. That can spread out over a number of months. And once they've recovered, they've still got to spend the money to put in place appropriate defenses. Hackers will come back and attack the same vulnerabilities, typically more than once. So the reality for our business is that we expect to see continuing growth in the market driven by the threat landscape. The threat landscape is not just cyber attackers, it's nation states backing cyber attackers, it's nation states undertaking attacks themselves, and particularly around the war in Ukraine, where we see Russian-backed attackers attacking supply chains that provide weapons and arms to Ukraine, or which might be capable of being disrupted and beating down the will of countries around Ukraine to help resist the Russian invasion. The digitization, migration to cloud, Internet of Things, all of those initiatives bring new vulnerabilities that organizations don't know how to close. The attack surface, therefore, is expanding. There are more and more opportunities, particularly with hybrid working, with working from home, across supply chains and managed service providers, where attackers are able to find a weak link from which they can get into very substantial numbers of devices. Most organizations have inadequate governance, risk management, and compliance. A recent survey by a major insurance broker identified that no more than 20% of boards in the UK have any real idea of what they're doing around cybersecurity. Most of the rest is simply left to somebody at an operational level to deal with, right up until the point that the organization has a breach. And of course, regulators know that, and so the compliance landscape is changing very quickly. GDPR in the UK will see a raft of regulation around cybersecurity, the Network Information Security Directive, both in the EU and in the UK, and across the whole of the digitized world, there is more and more regulation appearing around how organizations have to defend themselves, how they have to report ransomware attacks, what kind of skills they have to have. The SEC in the US is on the point of mandating organizations to have a nominated member of the board who is accountable for the organization's cybersecurity, and a reporting process that ensures that any breaches are reported to the regulator within somewhere between 48 and 72 hours. So organizations have a challenge. How do they meet these compliance requirements? Yes, there's an economic recession either looming or going on, but that doesn't change the regulatory environment. The bigger challenge is there is a global shortage of cybersecurity professionals. The market for supply is fragmented, and the reality, therefore, is that organizations are trying to pick and choose the components they need to build cyber defense in depth. And it's only cyber defense in depth that enables an organization to deal with today's modern attacks. When you come to GRC, particularly to IT governance, which is our leading brand for cyber defense in depth, you can access a whole range of governance, risk management, and compliance services, which are designed to integrate in a way that helps you as an organization deal with the challenges that they are. When you look around the buy side, you look around the supply side, of course, what you find is a highly fragmented market, lots of small companies, all of them doing their own particular thing, very few large organizations, other than at some levels the big 4 or 5 consultancy companies, but they don't have the access to the skills development and the platforms that an organization like GRC does. So from our point of view, the opportunities in the market are significant. The opportunities are not just direct. We have been assiduously building a channel distribution team for the last 5 or 6 years. We now have 400 channel partners, and our channel is very specifically managed service providers, so organizations who look after the IT needs of a number of other companies. Typically, their clients range from small one-person organizations right the way up to national and sometimes international organizations. We've just been selected by Tela Technology to be their official cybersecurity partner for 2023. It's a really big step down the route, as we have partners not just signing up with us, proud to put the IT governance brand on their website, along, being a Microsoft Gold partner and so on, but putting the IT governance brand on their website, saying they're proud to be an IT governance cybersecurity partner, because they know that their customers will see IT governance as a trusted provider of the kind of cybersecurity services which, as an organization, they need. And so it's that combination of our direct penetration into the market, the way in which our 3 divisions operate, the way in which our channel program takes those services through MSPs to their customers, that means that we can look forward with some enthusiasm to what, in spite of the economic circumstances, we think the market brings us. So we think we're well placed to capitalize on international opportunities as the market continues to grow in the US and across the EU, where we really are just at the beginning of growth. We've got established businesses now. We kind of know what we're doing in those markets, and we're in a position to put the foot down. We're continuing to invest in our e-commerce and SaaS divisions, where we see opportunities to do what we're doing far more efficiently, far more powerfully, to convert customers more, a whole lot of ways in which we can improve what we're doing there. And with a lot of activity which is going on leading into what's usually the biggest part of our year is Q4. That's January through March, when for some reason everybody's actually at work, and we typically have a very significant element of our year's revenue is delivered in that period. The growth in billings prior to that helps the revenue. Our billings continue to grow fairly steadily. And broadly speaking, currently our trading is in line with market expectations. We expect to see that roll over into a very strong Q4. And that kind of adds up to what we would normally talk about as being the kind of medium-term strategy, which is to build annualized revenue organically and through acquisition to £50 million, gross margins up to 65% from their current 60%. EBIT, we expect to see pushing up to 25% as we begin to see the benefits of SaaS revenue being a significant part of the group feeding through. Of course, we don't need to do much in the way of people as SaaS revenue scales up. And of course, we've got management incentives strongly aligned around achieving those medium-term objectives. So just looking from a kind of investment case at GRC as an organization, we've got a very clear strategy. There's a fast-growing and fragmented international market, which bring real growth opportunities, certainly organically, and as and when we find organizations targets with the right price and that fit well inside our business, the opportunity to acquire smaller businesses that can fit in and help accelerate our growth. The cybersecurity market is forecast to grow very substantially, a 14% compound annual growth rate. And we're an established, well-respected, market-leading IT governance brand. The company is extremely well known. We win many customers simply because they have been buying stuff, getting information from our website for years. They simply see us as being the trusted provider. Deep experience inside the organization across everybody from our subject matter experts through consultants to our development team. We are expert at what we do. And that's why we talk to our clients as being the place to go when they want to be able to run our expertise for their peace of mind. We have a dominant SEO position for most terms that we care about. We'll find us outranking everybody else on Google or Bing or any other search. And that means that we get very high volumes of customers coming to us, typically 4 million visits a year across our websites, with improving conversion rates. An important part of how people find us and come to us. Of course, when somebody finds us for a training course, that enables us to talk to them about everything else which they need as part of building cyber defense in depth inside the organization. It's not really a cyclical business. It's not a business which, we have very strong fourth quarter. We drop a little bit in summer because people go on holidays, but it's not a business which is cyclical in the way that a holidays business or so on is. The reality of cybercrime and of privacy regulation is that it's a challenge every single month of the year for our clients. We're achieving significant growth in our recurring and contracted revenues, our gross margins in the right place, highly scalable, EBITDA positive, and as we pay down debt, of course, the cash that we generate is able to support our ongoing investment in the growth of the business. So that's kind of the summary of where we are as a business from an investment case point of view. So I think this is probably a good place for me to stop. Very happy to take questions at this point.
Fantastic. Thank you very much indeed, Alan. Chris, thank you indeed for the presentation. Ladies and gentlemen, do please continue to submit your questions using the Q&A tab just situated on the right-hand corner of your screen. But just while the team take a few moments to review those questions submitted already, I'd like to remind you that recording the presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. Alan, Chris, if I may just ask you just to click on that Q&A tab, and just where appropriate to do so, if you could read out the question and give your response, that would be greatly appreciated. Thank you.
Sure. Thank you. So the first question is, how big is the US payment opportunity? And it's a kind of interesting question because the PCI DSS standard originated in the US. It was written by US experts, but it's been most determinedly applied in the UK and across Europe. And it's only in the last few years that it's begun to be something which is applied in the US. The US, up until just a couple of years ago, was still doing payment card transactions on paper. You could provide payment card details by telephone, all of which has been not allowed under a payment processing contract in the UK or the EU for probably between 5 and 8 years now. So we think the opportunity is huge. We think that the number of organizations, and we're talking to potential partners as well, the number of organizations that can draw on our services, with regulators applying more and more pressure to organizations to protect payment data, we think is very big. And the broader US opportunity is, for us, the ISO 27001 opportunity driven by personal data protection regulation. It's the PCI opportunity, and of course it's the cyber maturity model opportunity, with the defense industrial base in the US being forced by the Department of Defense to demonstrate on the maturity model the extent to which their cybersecurity processes are mature and robust for them to be able to win and or maintain existing DoD contracts. And the defense industrial base is a global base. So we're already delivering services in the UK and in the US to organizations who need to demonstrate CMMC compliance in order to go on winning business from the Department of Defense. So we think the US opportunity is huge. The second question, as a high margin recurring revenue business, now you should generate a great deal of cash. What will we look to do with this as it builds? So the answers to that are, I hope, kind of leap off the page. There's a lot more development we have to do. We think we're at the early stages of what our cyber comply platform could do. We think there are a number of ways in which we can make compliance way simpler for our clients, embedding cyber comply in their operations, taking our learning management system, our other platforms, tying them together in ways in which it gets really simple for clients to draw on all of our services, making it possible for them to access through our platforms the kind of personnel services, which at the moment they access by talking directly to our professional services sales team. So we think there's an awful lot of development that we can do. But of course, generating cash at the rate we expect to be able to do so will make acquisitions somewhat simpler. It will make funding of growth somewhat simpler. And of course, the board will go on paying attention to the time at which it may or may not be appropriate to look at paying dividends. But all of those will remain part of our overall look. The core drive is about growth, is about taking advantage of a fragmented market with huge drivers for growth potential in it. That's really where our primary focus is. And the third question, what drives the scaling of the business? Can you split your revenue between pure platform-based sales versus personnel-driven sales and delivery? We do that already, really. So our SaaS business is platform driven. It's people buying platforms, it's subscribing for services, the renewals are driven in ways other SaaS businesses don't, are all automated. We've got development work going on to make it much simpler for clients who need to move, for instance, their renewal dates around, things which are kind of normal in consumer business, but not really normal in B2B businesses. So we're continuing to do things that make it really easy for clients to interact with our platforms. We're looking at ways in which we can continue to drive growth without having to put people in there. We've already done that in our training business, for instance, so that while yes, training is delivered by a human, the whole process of buying a training course is online and is automated, including the delivery of your learner materials, the opportunity for you to upload whatever your dietary requirements are if you're choosing to go into a classroom, the delivery of your certificates, the management of your CPD, all of that is automated. And again, there's more automation that we can do, but it means that one of our potential acquisition areas is training businesses with appropriate portfolios of security and privacy training. We can put that into our existing infrastructure without needing to put a whole bunch of new people in there, and we can simply sell training in a way which is effective. We also turn a lot more, we're in the process of turning virtually all of our instructor-led training courses into self-paced courses. So we record those, we use AI to record those. That means that we can then translate them very easily into languages appropriate for other markets as we move into there. It makes it easy for us to update those courses, but it also means that we can deliver training at scale and internationally, again, without people needing to be involved in the process, because you can buy, download, consume a GDPR practitioner training course, for instance, do that all completely under your own time, all of the elements of it managed online, wherever you are in the world. So the building into our training business, as for our SaaS business, is all about automation and enabling it to scale up very substantially. Can we give more color on our growth and expansionary plans in the US and how we're scaling up in this market? Sure. So in the US, we are doing essentially two things at the moment. The first is the basic direct sales thing. We've established our website, we've established a presence, we've established traffic, we go after SEO, we go after all of the organic growth traffic that we can. We have outbound sales strategies. We are about to take our UK channel partner program into the US. So that's the first thing we do, is we do in the US, as we will do in the EU, what has worked in terms of direct growth in the US. The second thing that we're doing, of course, is reaching out and building partnerships with organizations that have complementary service offerings. So for us, ISO 27001, the Information Security Management Standard, is a key part of our offering. We're probably the biggest provider of ISO 27001 services anywhere in the world. And we know that, and we work with certification bodies. A certification body will independently assess a management system. If it meets the requirements of the standard, they'll give a certificate of compliance. But CBs are not allowed to provide consultancy services themselves because they would then be marking their own homework. So for us, logically, we partner. We don't do this in the UK because we're too big in the UK to make it a worthwhile activity, but we're already partnering in the US and globally with certification bodies who have customers coming to them saying, we want a compliance certificate, can you help us get it? And of course they have to say, no, we can't, but they then say, but we have an organization that we can recommend you to. And there are, in a number of our areas, PCI is another, partners who have complementary operations, and we're looking to partner with them because that gives us access to significant growth. So those are the first two areas we're focusing on in the US. It's our own direct, repeat our successful UK model, and secondly, identifying and partnering with organizations who can bring us the introductions to the kind of clients that we want to grow. And then we'll come back and have a look at those strategies in about 9 to 12 months' time, and then look at what we do next. Because of course we need to make sure that as we grow, we can continue to support the growth effectively. So I hope that answers that question. And that feels as though or it looks as though I've answered, or we've answered.
You have indeed. Thank you very much. You've covered off all those questions. Of course, there are any further questions that do come through from investors. The team will have the ability to review those. And as always, we'll publish the responses on the Investor Meet Company platform. Thank you again for the presentation. Just before redirecting the attendees to give you some feedback, Alan, if I may just ask just for a few closing comments, please.
Yes, sure. So as you will probably have gathered, we think that the opportunity for GRC in this rapidly expanding cybersecurity and privacy market is terrific. We've seen, in spite of the economic environment, solid revenue growth, double-digit revenue growth in the first half of the year. We think that we have everything in place and set for significant growth through Q4 and into the years ahead, not only in the UK but in the EU and in the US, and of course in Asia Pacific. And I hope in years to come we'll be talking about those those three markets. US, EU, and Asia Pacific as being bigger parts of the group than the UK currently is.
Thank you very much indeed. That's fantastic, Alan. Thank you, Chris. Thank you again for the presentation. Could I please ask investors not to close this session? You should be automatically redirected to provide your feedback in order the team can better understand your views and expectations. This will only take a few minutes to complete and I know is greatly valued by the company. On behalf of the management team of GRC International Group PLC, thank you very much for attending today's presentation. That concludes today's session. Thank you and good morning.
Bye-bye.
Bye-bye.